The 2026 Cost of Living Adjustment, COLA, is projected to be one of the most closely watched increases in recent years due to ongoing inflation and economic volatility. This adjustment directly impacts millions of American retirees, disabled individuals, and Social Security survivors. COLA is intended to help recipients maintain their purchasing power as living costs rise. With inflation still higher than historical averages, experts expect a significant adjustment in 2026. For many households relying solely on Social Security, even a few percentage points can determine whether they keep up with rising expenses or fall behind financially. COLA is calculated based on the Consumer Price Index for urban wage earners and clerical workers CPI-W. It measures inflation by tracking the cost of essential goods and services. If inflation rises, COLA increases to reflect the change. In recent years, inflation has remained elevated, partly due to supply chain issues, housing costs, and energy prices. As a result, analysts anticipate another noticeable increase in 2026. While final numbers won't be confirmed until fall 2025, retirees and Social Security beneficiaries are closely monitoring economic trends to anticipate potential changes in their monthly checks. For retirees, the 2026 COLA could provide crucial financial relief. Many older Americans struggle with fixed incomes while facing rising healthcare, housing, and grocery expenses. According to estimates, a COLA increase of 2 to 3% could add $40-60 per month for the average beneficiary. For those with higher benefit amounts, the increase could be even more. Though small, this boost helps cover daily essentials. Without COLA, inflation would erode Social Security's value over time. The upcoming adjustment is especially important because many retirees have little or no additional retirement savings to rely upon. Disabled individuals receiving Social Security Disability Insurance (SSDI) will also benefit from the 2026 COLA increase. SSDI recipients often face unique financial challenges, including medical treatments, prescription costs, and adaptive equipment expenses. Inflation impacts these areas significantly. A COLA adjustment ensures their benefits rise in line with cost increases, helping them maintain quality of life. For disabled individuals unable to supplement income through work, COLA adjustments are vital for long-term stability. Advocates emphasize that for people living with disabilities, even minor increases can drastically affect healthcare access and basic living standards. Survivors, such as widows, widowers, and dependent children, relying on Social Security benefits will also feel the impact of the 2026 COLA. Survivor benefits often serve as a financial lifeline after losing a family's primary income earner. Rising prices make it harder for surviving family members to manage household expenses. With an increased COLA, survivors can better cope with inflationary pressures. The adjustment helps ensure that surviving spouses, children, and dependents can maintain financial security despite losing a significant source of income, making the upcoming COLA critical for their continued support. The 2026 COLA could be shaped by several economic factors, including inflation trends, energy prices, and Federal Reserve interest rate policies. If inflation remains steady or declines, COLA might be moderate. However, if unexpected cost surges occur, it could rise significantly. Data from 2024 and 2025 will heavily influence the final calculation. Analysts recommend beneficiaries monitor inflation reports throughout the next year. Understanding these trends can help retirees, disabled individuals, and survivors prepare financially, potentially adjusting budgets or increasing emergency savings in anticipation of benefit changes. It's important to recognize that COLA increases don't always fully cover inflation. Historically, living costs, especially for seniors, have outpaced COLA benefits due to differences in spending patterns. Older adults spend more on medical care and housing than what CPI-W measures. As a result, some experts argue for adopting a Seniors' Consumer Price Index (CPI-E), which better reflects elder spending habits. While the 2026 COLA will provide some relief, beneficiaries should not assume it completely offsets rising expenses. Preparing for additional costs is wise, especially for those with limited income sources. Healthcare expenses remain a major concern for retirees and disabled individuals. Medicare premiums, prescription drug prices, and out-of-pocket costs often rise faster than general inflation. Even with a higher COLA, increased medical expenses can absorb much of the benefit increase. For example, if Medicare Part B premiums rise significantly in 2026, part of the COLA bump may be offset. Beneficiaries should carefully review Medicare changes during open enrollment to minimize financial strain. Strategic planning can help ensure the COLA provides meaningful net gains instead of merely covering healthcare inflation. The 2026 COLA may also affect income tax for some recipients. If the adjustment increases total annual benefits beyond certain thresholds, more individuals could owe taxes on part of their Social Security income. Currently, beneficiaries earning more than $25,000 individual or $32,000 joint may be taxed on up to 85% of their benefits. A COLA increase may push recipients over these thresholds. Retirees, disabled, and survivors should consult tax professionals or use reliable tax calculator tools to understand potential implications ahead of tax season. Housing costs have surged nationwide, impacting beneficiaries who rent or pay property taxes. A COLA increase may help offset higher rent or maintenance fees, but rapid price growth often outpaces benefit adjustments. Seniors and disabled individuals living independently should review options such as housing assistance, energy subsidy programs, or downsizing to improve affordability. Survivor beneficiaries, especially single parents or widowed individuals, may benefit from exploring local housing aid programs. The 2026 COLA offers financial help, but may not fully bridge the housing affordability gap. Food prices have remained volatile, particularly since supply chain disruptions and global conflicts. Retirees and disabled individuals who rely heavily on grocery purchases often feel inflation's effects more deeply. A higher COLA will ease grocery-related financial stress, but may not entirely compensate for rising costs. Beneficiaries should consider budget adjustments, utilize senior or disability-based discounts, and explore SNAP or local food assistance programs if needed. While COLA helps preserve buying power, proactive financial management remains crucial. Planning early allows individuals to absorb future price spikes without major lifestyle sacrifices. Beneficiaries should understand how COLA is applied. The adjustment begins in January 2026 and affects benefit payments for the entire calendar year. Recipients don't need to apply or take action. COLA is automatically calculated and added to benefit amounts. However, those receiving Medicare benefits may notice adjustments slightly differently, depending on premium changes. It's beneficial to check Social Security payment notices when released. These statements provide exact benefit increases and any deductions. Reviewing the documents helps individuals understand their new income levels and plan financial commitments accordingly. Recipients who are still working but receiving benefits may also experience changes. The earnings test threshold, which reduces Social Security payments if income exceeds certain limits, typically adjusts alongside COLA. Individuals still employed while collecting benefits should consider this when planning their work schedules or retirement dates. Higher COLA may raise the threshold, allowing more income without benefit reductions. Consulting a financial advisor to coordinate benefit timing, tax impact, and employment income is advisable. Smart planning can help maximize the value of Social Security while minimizing potential deductions. Financial advisors recommend that retirees, disabled individuals, and survivors avoid relying solely on the COLA increase to cover future expenses. Instead, they suggest reviewing budgets, tracking expenses, and exploring additional income sources or benefits programs. For example, eligible individuals may qualify for property tax reductions, energy assistance, and supplemental income programs. Creating a flexible financial plan ahead of 2026 will help manage inflation uncertainty. While COLA provides relief, proper forecasting ensures individuals maintain stability and avoid unexpected shortfalls due to rising costs beyond Social Security adjustments. The 2026 COLA highlights the need for long-term Social Security reform. With more Americans retiring and fewer workers contributing, the Social Security Trust Fund faces long-term solvency challenges. Some policymakers advocate increasing payroll taxes or adjusting eligibility ages to preserve future benefits. While COLA ensures current recipients maintain purchasing power, sustainability issues persist. Beneficiaries should stay informed about future legislative updates that may affect benefit structures. Understanding these ongoing discussions helps prepare for potential changes beyond COLA increases, ensuring long-term financial preparedness. Survivors and disabled individuals often face unique financial vulnerabilities. Policymakers are exploring additional benefit protections for these groups in light of inflation and economic hardship. Some proposals include boosting minimum benefit levels for low-income recipients or creating targeted adjustments beyond COLA. While no major legislation has passed, ongoing debates may influence Social Security programs in the coming years. The 2026 COLA is an important step, but continuous advocacy is needed to ensure the most vulnerable beneficiaries receive adequate support during economic fluctuations. Beneficiaries should begin financial planning for 2026 as early as possible. Tracking inflation trends, reviewing benefit statements, and consulting with experts can help maximize income stability. Many financial planners recommend creating emergency funds, reducing debt, and making small lifestyle adjustments ahead of benefit changes. By preparing early, individuals can fully benefit from the COLA increase while minimizing risks such as rising taxes or healthcare premiums. A proactive approach ensures that the 2026 adjustment becomes a positive financial turning point rather than a temporary relief. In conclusion, the 2026 COLA presents an opportunity for retirees, disabled individuals, and survivors to protect their financial stability amid ongoing inflation. While not a complete solution, the adjustment helps preserve purchasing power and supports those living on fixed incomes. Understanding how COLA works and planning accordingly can significantly improve financial outcomes. By staying informed, evaluating expenses, utilizing available resources, and preparing in advance, beneficiaries can make the most of the upcoming increase and face 2026 with greater confidence and control over their finances.